All right, folks, thank you for stopping by. It is November 28th, turning up on a Tuesday late night session. This is actually our third video for the day. I've already dropped two, one real estate update, and then we dropped another cryptocurrency update. This is going to be the third one of the day going live, and I also have another video that is ready to drop tomorrow. So if you are new here, make sure you subscribe, hit that notification bell, and we are going to get right on into tonight's episode right away. Lot to cover. And we're talking about Ripple IPO, and we're talking about XRP. I'm sharing this one out live on Twitter as we get rocking and rolling. Thank you so much. Live now. Boom. Good to go. There's that. And we're going to have some fun tonight, guys. We're talking about Ripple equity, the potential for a 10x on the stock of Ripple. And then we're also talking about XRP. Can it do a 10x as well? And for many, 10x is pretty conservative. A lot of folks are talking about 589, going to the moon, doing a lot better than just a 10x. I understand that. I understand that people think that actually Ripple equity can do quite a bit more, especially from the prices that you're at right now. What gets exciting for me is if we see the broader equities market correct as well, that might be an opportunity to pick up Ripple equity shares even cheaper. Same thing for XRP. We're watching both of these right now with an understanding that both are very risky. This is on the risk side of your portfolio. You guys know what I have on the safe side of my portfolio. I'm not here to give anybody financial advice, but I just show you what I'm doing. And the links are up down below, by the way, too. I have a link for Link2 if you're looking to get some Ripple equity. And then I also have my website for all of our other community resources, including our exchanges, our wallets, and for the precious metals as well. So it's all there for you guys. I want to get right on into this one because we have so much to cover. So thank you for stopping by. It does us a big help if you hit that thumbs up for us for checking in here and dropping a comment down below, letting us know what you got cooking for us tonight. Community coming in hot. I see you guys rocking and rolling. It is a late night session, firing it up here. 11:30 on the East Coast, 8:30 on the West Coast. So without further ado, let's get right on into it, guys. The market back up today. Love to see it. Bitcoin back up to 38,400, tapping it once again, a level that we've gone off of a few times now here, breaking through 38,000 twice just within the last few days here. Friday we did it, and then once again here today, back up to 38,400. Ethereum got a little pump today too, back up to about 2,075. The most recent highs of 2,138. Tapping off that a couple times. And for XRP, it was back up to 61 cents. XRP, remain patient, guys. This thing's ready to go. We're going to show you guys a chart on this thing zoomed out on the monthly. This thing is absolutely primed and ready to rip. XLM back up to 11.8, basically back up to almost 12 cents here today. And what really, spurred this was the Fed's, there was actually two Fed speakers that came out today and gave some comments that were very dovish. And I'm about to show you guys what those were. But basically what that led to was the DXY falling off and crypto, gold, and silver all pumping. It was a fantastic day. The DXY back down to 102.5, actually going a little bit below that level, 102.5, back up to 102.6 right now. But the DXY falling off along with the 2-year and along with the 10-year. And the reason why I think these bonds are falling off is because the expectation is that the Fed is going to cut rates next year. It just came out today, billionaire Bill Ackman with the prediction that they were going to cut rates into Q1 of 2024. So the expectation from the broader markets and the masses right now, what everybody's being primed for and expecting, is the Fed is going to cut rates. So that's why your DXY is falling off, the dollar strength, the dollar index falling off, along with the 2 and the 10, along with bonds more broadly speaking, because they're anticipating that the Fed pivot is coming in. And I believe that that Fed pivot is coming in as well. My question is what's going to be the black swan simulation event catalyst this time around, this election cycle? Once again, they need an excuse. And let's take a look here. UK Brent crude oil back up to about 82, cooling off here. But we'd seen some falling off here, a little bit of weakness in oil, a couple pullbacks, but now it ripped here once again as the dollar index falls off. And silver pumping all the way to $25 per ounce today, folks. We've been talking about this one, under 25 bucks. It's an opportunity here. So much correction to be made for silver. Silver needs to double just to get back to the historical ratio between gold and silver, what the historical ratio is. Now for gold, we see gold once again back above 2,000 here over through the weekend. We got back above 2,000, and then we break up here today, guys. We are so close to all-time high. 2,051 on our gold chart. And actually, I wanted to zoom out. Give me a second to adjust my chart here because I wanted to zoom out for both gold and silver, along with the DXY to make a couple points here. This is a triple tap off of this level. And in 2021, we hit, or sorry, 2020, you can take a look at the chart here. This is the weekly chart zoomed out all the way back to 2020. Gold had already started to run up, but then basically in the summer of 2020, it went all the way up to about 2,075. Same thing in March of 2022, back up to 2,071. And then most recently, we topped out this year basically at 2,080. Okay. Now you have to consider it's actually trading at a much larger premium against other currencies. It's already back up to all-time high in other currencies. So this correction was expected because now that the Fed is expected to pivot, go dovish, lighten up, our dollar doesn't have the strength. The only reason why we had strength and why we were the cleanest shirt in the closet was because the Fed was raising rates at the fastest pace in history. So we went from 0% Fed funds rate all the way up to 5% Fed funds effective rate. And that rug pulled Main Street, but it did add strength to the dollar temporarily. So the falling off of energy prices that we're currently experiencing, temporary, okay? Even with demand falling off, the dollar is being weakened as well. So even though China and the broader global economy is going into contraction, and the U.S. is as well, that doesn't matter because we still have a weakening dollar, right? So no relief in sight. Typically during a recession, during demand falling off, that price is going to come down, but we could actually see prices actually start to run up and continue to actually run up from what they've been doing, even if they go dovish, and especially if they turn back on the money printer, because then we have more dollars chasing the same goods, same services, same commodities, same alternatives like Bitcoin, like gold, like XRP. So be prepared to watch this one, guys. This is going to be very interesting to see. And it's the same thing for silver. You can see that silver has only made it up to about $30 per ounce. This thing is so suppressed, and there's tremendous industrial use for this thing, but it's been so suppressed, ready to break out. Like I said, it needs to double just to get back to the historical ratio between silver and gold. Okay. All-time high for silver back out to about $50 per ounce. Okay. Gold on the triple tap. Love to see it. NVIDIA, I've already, shown you guys this thing running up. It's done a lot. And it's already, it already came back into correction territory once. Now, it did go back up to an all-time high here recently. Okay. So double tapping off this level. It's going to be very interesting to see what happens from here. As, like I said, you could see some of these assets continue to go up, but I believe that the equities and the real estate are two assets that are going to be in correction over the next year. So I would watch out for that, is for the equities to correct and for real estate to correct. It's already started, actually, by the way. We covered in the real estate update this morning, 18% drop year over year for the median new home sale price. So the builders are having to drop price and they're having to add incentives. If you look at the real details of that data point and look a little bit deeper, what you'll find is that they're offering incentives that are equivalent to $20,000, $30,000, even more, $50,000 equivalent price reduction by offering rate buy downs. Even if they're temporary, it's a discount on the overall price. So it's going to be very interesting to see as we enter the election cycle once again. 1 year to go. And my question just is, what event do they have in store for us next? What excuse can they come up with? They definitely need one. And so we're going to be watching this one here closely. Although we're starting to see a run up and it is getting us excited, just be careful here because this is kind of the final moments before we start to enter recession. Okay. Now, speaking of someone who's gone through a couple cycles and seen some things, we give a rest in peace to the legend Charlie Munger. This post from Grant Cardone, a legendary quote from Charlie. He says, quote, "The world is not driven by greed, it's driven by envy. I have conquered envy in my own life. I don't envy anybody. I don't give a damn what someone else has, but other people are driven crazy by it. Charlie Munger. See you soon, legend, from Grant Cardone. And I'm actually going to be dropping the video tomorrow. I actually speak briefly on Grant Cardone. So that one will be dropping at 8 p.m. Pacific Standard Time, 11 p.m. Eastern. Make sure you guys subscribe, hit that notification bell if you're new here so you don't miss these updates that we're dropping on a daily basis. But 99 years of age, Charlie Munger passes away, the right-hand man of Warren Buffett. And I'll just share one brief story on this that just cracks me up. My mentor, Dan Pena, is an investor in Berkshire Hathaway, big believer in Warren. And he shared a story recently of going to see Charlie and Warren at their investor conference, right, at the Berkshire Hathaway annual conference shareholder meeting. And he said that both Warren and Charlie, they don't give a damn what anybody thinks, right? They're very clear about, their program being very simple. They're value investors, and they've done a model that's worked for a very long time. Now, what's interesting about Warren, the Buffett, the Oracle of Omaha, is he's gotten to a level where the banks, the Treasury, they're calling him to come in a need of crisis. His institution, his fund has gotten so big that he has been a lender of last resort in the past for the United States. And so Warren and Charlie, at the top of their game all the way into their 90s, definitely inspirational, definitely an interesting life that they have lived. And, to see this change of the old guard passing away. These are guys that are, been in the game since the 50s. They've seen so many of these things come and go. And what I found so interesting is listening to CNBC and their comments on the death and other, mainstream outlets kind of reacting, was just the fact that just how humble both these guys are, right? Both Charlie and Warren. But then the fact that the most shocking thing for me was the fact that they bought Apple stock 9 years after their IPO. See, I'm going to be talking about, can Ripple equity, can Ripple stock and XRP both 10x? Well, we're talking about a company that hasn't even gone public yet. What's so interesting is that the largest share that they, in their portfolio that they now have is Apple, but they were 9 years late, right? 9 years after the IPO. And that's a true testament of their value investment model. That, they didn't care about really being first. They just continuously bought discounted value. That was the model, right? And so, yeah, very definitely a lot to learn from that one, and kind of the whole investing world, watching Charlie pass and Warren in his final moments too in the throne, so to say. But with that being said, folks, we are going to get into it. So the reason why we got those market moves here today was because two Fed speakers came out, and they came out very dovish. Let's take a look at this. So we have the Fed's Waller says economy may be slowing enough to tame inflation, and Fed's Bowman not convinced. And so the statements here, a pair of Federal Reserve governors said recent signs of a slowdown in the economy could help return inflation to the central bank's 2% target. But they appeared split on whether interest rates are high enough to do the job. The economy appears to have softened towards the end of the year in a manner that could push the rate of inflation lower, Fed Governor Chris Waller said Tuesday in a speech in Washington, D.C. Still, he cautioned that more evidence is needed. Quote, while I am encouraged by the early signs of moderating economic activity in the fourth quarter based on the data in hand, inflation is still too high, and it is too early to say whether the slowing we are seeing will be sustained. Now, the market didn't hear that part, right? All they heard is that, they might have done enough, right? The economy may be slowing enough to tame inflation. That's what the market picked on, and the market absolutely sent it. Fed Governor Michelle Bowman, in a speech in Utah, viewed the progress on slowing the economy and getting inflation under control as more uneven. She said she still expects the Fed, quote, will need to increase the federal funds rate further to contain inflation. Now, the market missed that. All they heard was the dovish comments, right? And it was back up today. But what I've been noticing is a trend amongst the insiders at these top retail companies, Jeff Bezos dumping his stock, Jamie Dimon, you talk about the banks still struggling, banking crisis still underway. They're getting out. They're dumping shares. You know, Bezos just dumped $1 billion worth of his shares. JP Morgan has never sold his stock. He just sold off. And then we now see that Charlie Munger, his estate's going to be handed over. Not sure where that's going, but I'm sure he's had significant estate planning done for this day. But just the shift is underway, and a lot of folks jumping off the ship, right, while they still can. And then what I'm looking at, you know, that's at the top, the high end, right? But then when we look on the on the micro level, what's happening on Main Street? Well, without a doubt, the situation continues to deteriorate for the average American, with 60% of Americans are living paycheck to paycheck heading into the holidays per CNBC. And I wanted to back that off after covering the Fed statements to reiterate the point that progress for Powell, progress for the suits, is pain for Main Street. So while the Fed guys are sitting there, the suits are sitting there, and they're having a good old time, and they get a laugh, you know, and kind of debate back and forth. And it's kind of like a fun little game for them. Have we tightened enough? You know, well, what do we need to do next? You know, have we brought enough pain to the American people? That's what they mean by have we brought inflation down. Is the only way you're bringing that down is by raising rates and rug pulling our Main Street economy and the everything bubble that's been propped up by cheap debt, the cheapest debt that we've had in the history of mankind. And this is what they've done, all done by design. And we see now they're reporting. This is how, you know, stupid they expect the people to be, which they really are because they don't understand the data. And then the data that's being shared is just flat out fake, manipulated lies. And what I'm talking about specifically is the Black Friday sales. Folks see headline numbers, and we're supposed to be cheerleading because we had the biggest Black Friday sales ever. Okay. Well, what do we know right now? That there's actually still a significant amount of money into the hands of Main Street savings just from the stimulus programs from 2021. Now, it's down from the trillions that we had, but we still have hundreds of billions of dollars of savings. Excess savings is still within the American people. With that being said, 60% of Americans are living paycheck to paycheck, and you're seeing the middle class and the poor are the ones that are feeling the most pain from this squeeze, right? Those that own assets, they, you know, are seeing, okay, their portfolios might be taking a little bit of a hit, but the bump that they just got over the last few years was enough to retire most of these guys that were sitting on a little real estate portfolio, a retirement account that got the bump, right? Now we sit at a point where if you want to try to squeeze a little bit out of this thing, you might be able to, but I'm just comparing all of my returns against the real inflation rate, not the 3% CPI lie. I'm comparing all of my returns, whether I'm looking at crypto, whether I'm looking at silver. If my silver goes up 10%, as I've been saying lately, 10% is the real rate of inflation for me. I'm just going to round up. We know that their CPI lies about 3%. Let's double that to get closer. So we're at 6 or 7%. And let's just round up to 10% to be fair. And as we've shown with all the data points, it's actually much worse on a lot of other commodities and goods. But what folks are focusing on is prices coming down 5%, prices come down 10%. Well, sure, after we've risen literally, hundreds of percent, we've doubled in the last 2 to 3 years on many goods and services. And so that's why I'm comparing all of my returns need to be compared against a 10% inflation rate, which that's why, for me, I'm going to hold something like this on my safe side of my portfolio. And then if I'm going to look for some gains, as I titled this episode, can Ripple stock and XRP both 10x? That's what we're going to be talking about later in this episode. Now, thank you everyone for stopping by. Let me take a sip of my adult beverage. Appreciate everyone. God bless all of you. This one from Zero Hedge. They say, remember, cutting rates without restarting quantitative easing, that's what QE is, won't help fiscal picture where the US now adds $1 trillion in debt every 3 months. Let me break this down. So we've already raised rates at the fastest pace in history. As I explained, that rug pulled Main Street economy. We've popped the bubble. But without restarting QE, or basically printing money, to make this simple for everyone to understand, then we won't be able to help the fiscal picture, which is the balance sheet of the United States government. The deficits that we're running at $1 trillion in debt every 3 months is being added. So we're on pace to add trillions per year in our deficit. So it's not sustainable. And nobody's showing up to buy the bonds, which is the debt that they're trying to issue, right? Now, as I showed you guys earlier, bonds were back down today. And that's because they're front running the Fed pivot, the Fed dropping rates. Okay, that's fine. But even if they do drop the rates, and even if these bonds come back down, right? We've been talking about how nobody's going to be the buyer of these things. And they're going to have to show up with the QE. They're going to have to add it to their own balance sheet because nobody wants these bonds, right? Nobody wants to add American debt to their balance sheet. Do you want to have, I mean, and there are plenty of guys that are saying right now that they're happy to be on the other side of that deal, to lend the United States government money for a 5% return. There's plenty of folks that are lining up to do that, just as happy as can be. And they say that the United States will never default. Okay, the United States won't default. Let's run with that. How are they going to pay back these liabilities? And how are they going to, continue to manage this deficit? Massive money printing. So even if they don't do a technical default, they will default through proxy by inflation, meaning they're going to have to print money to pay back these liabilities, to pay back these debts, and just to pay the bills that have to go out, just to fund the government. As we now know, right, that they've removed the debt ceiling until January of 2025. So for the next year, they still have no limit on where they can take this thing, where they can run it up. And it's at a current pace of $1 trillion added every 3 months. It's unthinkable. I mean, you can't even wrap your mind around $1 trillion. It's unfathomable. And this has just become another headline that most people look past, don't understand. And then, like I said, you got a lot of guys that are just happy as a clam to get 5% return. Meanwhile, real inflation is much higher than 5% on anything that matters. So you're not winning. In fact, you're probably losing when we really break it down. So that's why right now I'm remaining cautious, although sure, Nvidia could pump another 10, 20%. These Magnificent Seven could go up some more, and the S&P can go up some more. How much more do you want to squeeze out of this thing, right? And I look at a little bit of upside for considerable amount of downside. That to me is the Magnificent Seven and the broader stock market as a whole. To reiterate that point, let me share this article here from MarketWatch. And they're talking about the Magnificent Seven, and they say, investors beware. The Magnificent Seven are starting to resemble the Nifty 50 stocks that got crushed in the 1970s market crash. Now, I wasn't around during the 70s. Many of you guys probably weren't around during the 70s. I know most of the kids my age that are trading stocks in a Robinhood account weren't around during the 70s and 80s during the Nifty 50 run up here as well. But it's very important to understand this is nothing new under the sun, what's taking place right now. Let's read this article. What do the Magnificent Seven stocks of today and the Nifty 50 names of the early 1970s have in common? I forget, there was also another term during the Great Depression. I don't know if they talk about it here. If anybody knows in the comments down below, let me know what it was called. There was it wasn't the Nifty 50, but it was like the something 20 or so. It was there was some term for during the Great Depression too. The Roaring 20s in the lead up to the 1933 or 1929 crash and the Depression through the 30s. But same thing took place in the 70s. And we compare, what do the Magnificent Seven stocks of today and the Nifty 50 names of the early 1970s have in common? More than you might expect, according to one Wall Street strategist. Apart from representing the extreme levels of concentration in the U.S. stock market, the company's earnings multiples appear comparable. Apollo Global Management Torsten Slok recently showed. Slok also compared Magnificent Seven multiples to the S&P 500 information technology sector of the dot-com era and found some similarities there as well. So, you can look back to the dot-com and I see so much, especially with crypto and kind of the AI hype, right? Another tech narrative hype cycle Same thing happening with the new digital asset class, right? Investors should be eager to glean any lessons that they can from the Nifty 50 era, given what happened to those stocks during the bear market of 1973 and 74. During the punishing 2-year stretch, the S&P 500 fell by more than 40%, according to FactSet data, with shares of many of those market leaders seeing even larger declines. So that's what I'm talking about is, okay, is it not going to do another 40%? Sure, maybe it'll only do 30, 20%, but still, what do you actually, have on the upside potential from here too? You have maybe another 10, 20% upside return, and you have just as much downside potential, if not more. That's not a trade where you have an unfair advantage. And that was another point that Charlie Munger said in one of his most, actually his latest interview, his last interview. He highlighted the fact once again that all of his investments, he's gone in with an unfair advantage. And meanwhile, what do they want you to invest in? The same investment opportunities that everybody else, every other doofus moron with the 401k is getting, pushed on into. That's what they want you to do. Meanwhile, guys like Charlie and these other big hitters, they're only going for opportunities where they have an unfair advantage, right? And so that's why for me, I'm not trying to squeeze another 10% out of NVIDIA or Amazon. Are these companies going to make it? Are they good, solid companies? Sure. But comparing them to the real rate of inflation, I don't think that you're going to be able to squeeze much more out of that opportunity. Now, the issue of whether their high valuations were ever truly warranted remains a subject of debate among academics studying the financial markets to this day. And the point is I'm not here to stop or, tell anybody that NVIDIA might be overvalued at today's price of, it went up to about $500 per share. It could still run up significantly more, but I think that we're at the end of a cycle here. We're at the end of a narrative, and we're coming back to reality where, this new digital asset class that's going to take the financial space by storm is going to be massive, and it is going to draw in trillions. And we are going to be doing 10Xs, as I put in the title tonight. Ripple equity deal and XRP, the potential for both of them to do a 10X. The potential for gold to do a 10X even, let's talk about it. So Peter Schiff shared some comments here, and I'm excited because I got a video dropping tomorrow where I talk about Grant Cardone winning his case. I talk about Peter Schiff winning his case, and I compare it to Ripple and XRP winning their respective case as well. And the video is going to be titled, The Good Guys Are Winning. And it's all about how the good guys and gals are winning. And, this is good to see. And we're starting to get price discovery on these real assets. So gold is on the verge of a historic breakout, and the US dollar is on the verge of a historic crash. This will be a game changer for the Fed and the economy, as it will send inflation, interest rates, and unemployment soaring. So forget about the soft landing, it's crash and burn. And I believe that he is 100% correct, that we are going to be getting some sort of black swan, some sort of simulation event similar to 2020. And it is going to be the perfect excuse and primer for the Fed to turn back on that money printer, to come back in to save the day and try to paper this thing over as we go into the next election cycle. And if you understand, right, they've been bragging about how inflation came down. You have to understand, the inflation coming down was a function of the DXY, the dollar, going back up briefly. And so the dollar went up briefly because the Fed raised the rates at the fastest pace in history, and we've been the cleanest shirt in the closet. And that's why we got inflation back down, is because it was cheaper for us to buy oil. It was cheaper for us to do the energy, to fill up our car with gas, right? Because we had a strong dollar. That's why some of those came down. And then what we're about to see now, though, is it's about to come back, and it's going to come back even harder than it did before, potentially. And it's going to, and the reason why it's going to is because the government response was so big last time. And so now the government response is going to have to be even bigger than what it was in 2020. That's the situation at hand. They've been backed into a corner. And when I see this and I see all this taking place, for me, I just look for safety. And if I'm going to be investing, which is so unfortunate, they've made us all have to be investors. with every extra dollar you have, you're trying to invest it in some sort of way because you know that your value is getting destroyed. So they forced everyone in a huge misallocation of capital. And what I believe we're about to see is a return. If you look at the commodities to equities ratio, it went way tilted towards equities. Well, we're about to see that shift back towards commodities, and that scale is going to be kind of evened out. What's interesting, though, is we're in the brink of a new asset class with digital assets. Some of them are commodities, pure commodities like XRP. You could maybe make the argument that Bitcoin is one. We know that that was the statement from Bill Hinman, and that if you add the decentralization prong through the Hinman speech, he's of the opinion that you would, have a commodity in Ether, but I'm not here to debate that, right? I'm just making the point. We have a digital asset space that's coming in and a return from equities to commodities, and the digital asset space is about to get additional exposure through the ETFs. And as I've shown you guys with both gold and silver, gold did a 5x, up 500% after its ETF got approved in 2003. And then silver did a 10x, 1,000% returns over the same decade. So what is crypto going to do? Probably more is my expectation and speculation, because gold and silver, folks have been able to get exposure to this metal for thousands of years before they had that ETF. The ETF is going to have a similar effect, but I think it can actually do quite a bit more than gold and silver, because there's more utility there too as well. So, you have a lot of factors. It's not just the ETF coming in that's going to push up XRP or push up Bitcoin or Ethereum. You have many other reasons as well. And, we're going to get right on into the crypto update here tonight, guys. If you haven't already, please make sure that you have smashed that thumbs up. And if you haven't already, make sure you drop a comment down below. Let me know what you're thinking about here tonight. We got a little bit of a pump underway, and we're going to get into tonight's update where we're talking cryptocurrency. Ripple once again stepping into an arena that matters, stepping in and sitting down at a table that matters. And I'm going to show you that. And then we're also going to talk about additional corridors firing up for XRP, along with the comparison for Ripple IPO valuation. Let's take a look. So right on into it, guys, we have the Digital Monetary Institute. Interesting deal here. They are pleased to announce that Ripple will be partnering with the Future of Payments Report 2023. So this is the Future of Payments Report 2023. It appears that this is some sort of new deal here. And I had to pull this up. Okay. I see that we got Lee here in the chat tonight. Thank you for the 10 spot, Lee. Zach, brother, your name is trending through the Jesus Coin community. Looking forward to your video. And God bless you and your family, friends, mods, and subs. Lee, I appreciate you, brother. I appreciate the Jesus community. And not just those that hold the coin, but all those that love Jesus. I'm going to be doing a review on it here shortly. I know that I promised you one. I know that they are very excited. I'm just going to stay tight-lipped, man, because I'm going to tell you right now, it gets me uncomfortable talking about some of these meme coins. It's so crazy. Yeah, full transparency, I don't own any, okay? I don't own any. And I'm not going to buy any because these things make me feel uncomfortable. These things can go absolutely nuts. And so I think that folks are going to be kind of surprised when I actually do the Jesus Coin review. Yeah, I'm just going to leave my comments at that. If you're new here, you're going to want to tune in for this one. So just be prepared. Normally, I don't cover meme coins. All my regular listeners kind of know that. My mother told me if I don't have something nice to say, don't say anything at all. So that's why I don't review many coins. 99% of crypto, I don't even really take too serious of a look at, especially memes. But Lee, you and your Jesus Coin community have been very supportive, and I appreciate the love, and may God bless you guys. Thank you. Now, let me get back on track with your guys' Jesus Coin. That's unbelievable. I see another super chat. I almost missed it from Michael 319. Zach, your channel show Twitter has been a staple in my own crypto financial journey. Appreciate all your hard work. Thank you, and stay the course. Michael, it's an absolute pleasure. It's a blessing, and this opportunity. Thank you so much for supporting the channel and helping me get the good word out. I'm glad that I can be a key part of your life right now, my friend. Okay, here we go. You guys with the Jesus Coin crack me up. You guys crack me up, man. Okay. So who is this group, right? Okay, so let's go back. Let me restart. The Digital Monetary Institute is pleased to announce Ripple coming on board for the Future of Payments 2023 report. And this is who they are right here. So they are a public forum, okay? What we have here is the OMFIF is an independent think tank for central banking, economic policy, and public investment, providing a neutral platform for public and private sector engagement worldwide with teams in London and the US. OMFIF focuses on global policy and investment themes relating to central banks, sovereign funds, pension funds, regulators, and treasuries. Global public investors with investable assets of 43 trillion are at the heart of this network. How about that? Yeah, wow. I've never heard of this group here before. This is the Official Monetary and Financial Institutions Forum. Membership offers insight through analysis and meetings. OMFIF analysts draws an expertise from our in-house specialist and global network of public and private sector members. Many OMFIF meetings held under these rules take place within central banks and other institutions, official institutions. The advisory network actively participates in these activities and is chaired by Lord Magnad Desa, Emeritus Professor at the London School of Economics and Political Science. So this is where the public and private sectors meet to shape the future of finance and economics. You're talking about central banks. You're talking about sovereign wealth funds, pension funds, regulators, treasuries, everything from central banking, economic policy, public investment, everything. And this public-private sector, Ripple being one of the key sponsors. And I'm very interested to see that report come out. Once again, that is going to be the Future of Payments 2023 report. And once again, like I said, Ripple just continuously pulls up to tables with big hitters, right? Where real deals are getting done, tables that actually matter. They're not just doing the little cute stuff like most of these other cryptocurrency projects. This is with the central bankers. This is with the treasuries, the sovereign wealth funds, the pension funds, you name it, right? And Ripple not just showing up, as we've always shown you guys, with Brad doing these speeches, keynote speaking at so many of these events. They're not just showing up and setting up a little booth. They're taking advantage of, and if you look at most of these conferences, they have their own, XRPL hub or XRPL meetup or, party, right? And then on top of that, you're seeing keynote speeches by Brad Garlinghouse, Stuart Alderati, David Schwartz, and others as well. So they don't just show up, they take over, and they're going to be coming into this group as well. Very, very interesting to see this one. The Official Monetary and Financial Institutions Forum, Ripple going to be leading the way. Now, another Ripple corridor firing up here between Saudi Arabia and the Indus Land Bank in India. Now, if you recall, I've already highlighted how there's 5 BRICS nations where on-demand liquidity XRP has already gone live. Brazil, India, Argentina, United Arab Emirates, and the other one I am forgetting, but there are 5 that have already gone live, with many more already in consideration. When you look at like China, they've sent their central bankers to meet Ripple at their offices in San Francisco. Ripple actually bragged about hosting the central bankers from China. And then if you look at other deals as well, there's multiple partnerships. Africa is the other one. Sorry, that was the other one, right? It's Africa. And I'm talking about the broader continent, because Ripple's partnered up with On Africa, and On Africa is a company in the region that provides liquidity for up to basically 30 plus countries, I believe, within Africa and North Africa and the Middle East region as well. But this quarter right here is key between Saudi Arabia and India, and I want you to listen to the experience. The experience for these guys that have been in the payment space for decades when they come on to work with Ripple. Let's take a listen in on this one real quick.
So we'll have to build a customer experience around that to make sure that the customer feels so comfortable when using it.
It has been one of the most pleasant experiences in terms of going live with a new partner. See, I've been in this business for almost 15 years now, and normally one were to do a bilateral tie-up with a counterparty on the other side, it could take you months. I mean, the legal agreements, time-consuming, talks between technology teams, coming to understanding and agreement. It can take ages, and at times it can be very, very frustrating. And as Gara rightly said, I think this was one of those integrations that perhaps was up and running in a span of about 1.5 months.
like you said, someone who's been in the space here, normally it takes months or longer, right? He said it's taken hours, right? Just seamless. And that was that Ripple Swell conference, I believe. And you got that quarter right there between Saudi Arabia and India already going live. And we know Saudi Arabia has already aligned themselves with the BRICS heavily as well, too. In fact, they're going to be joining BRICS probably most likely here soon. We're already seeing that they've gone away from the dollar. And the reason why this is so important is because folks are saying, BRICS is not accepting XRP. BRICS is going to go to their own gold-backed currency. That's probably true, right? They are considering all of those things. But without a doubt, it is a fact that they've already gone live with on-demand liquidity XRP in multiple of these jurisdictions. And Ripple has already been meeting and working with some of these central banks as well, too. So it's not just, little partners here between Saab Bank, SABB, Saudi Arabia, and then Indusland out of India. It's not just these little payment providers. They've also been meeting with the central bankers from these countries as well, too. So there's a lot more, I think, that could be cooking up there. But never forget that we already have 5 countries within BRICS that are already live with on-demand liquidity XRP. Now, let's get into this price action, folks, and what we got expecting coming up here shortly for XRP. I think this thing's ready to absolutely break out at any time. Now, this gentleman here, Maximus Prime on Twitter, says, I keep looking at the long-term chart of XRP and I can't stop being long-term bullish. This thing has a shot at seeing $3 before the end of the year. I know it seems like a long shot. It's such a effing turd, but it's there in the chart. There's a chance, however slim. Now, let me know in the comments what you guys think about $3 by the end of the year. It looks like he's pulling kind of, we've obviously been in all these falling wedges, these descending triangles and wedges and whatever, these different supports and resistance that we've been meeting up against. And the TA guys will dissect this thing 1,000 different ways. We'll tie in a riddle. And what is the end, the end conclusion? This thing's absolutely primed to rip. It's going to go so hard when it does. On the monthly chart, this thing is way. You're kidding me. You're kidding me. I was going on such a good rant. Oh, we were so in it. Oh, you guys missed it. That's so sad. I was going for like 5 solid minutes there. My bad, guys. That's what I get for not watching the chat. That's what I get for not pulling up. And I was meaning to give a shout out to Lee because I saw that Lee dropped another chat, another super chat while I was playing that clip. Lee, thank you so much, brother. Oh my gosh, we've probably been going for like 10 minutes. Lee, much love to you, brother. Thank you for the 50. XR Peaky, thank you, brother. Did I? Oh my gosh, I literally, what did we cut up? Like, we went, you guys missed all of the charts. You guys missed all of the TA analysis that I just went through, huh? Oh my goodness. Okay, I guess we have to restart. We have to go back in time. Just like the Riddlers, we got to be time travelers. I'm so sorry, guys. That's so unfortunate. That's so crazy. Oh my gosh. Thank you guys for putting up with my nonsense. Okay. I did it once. I can do it again. I do this all day. My apologies. My apologies. Let's rock and roll. Okay. Here's the TA. I can't believe I did that. Oh, okay. So back to the TA. Maximus Prime says, I keep looking at the long-term chart of XRP and I can't stop being long-term bullish. This thing has a shot at seeing $3 before the end of the year. I know it seems like a long shot since it's such a effing turd, but it's there in the chart. There's a chance, however slim. Okay, that was what you guys missed. plus a little bit more, because then I went to the chart here and I showed you guys on the monthly chart what we're talking about with these levels. With XRP, okay, big time support at 55, and we have big time support down at about 30 cents, okay? So, okay, if they want to kill us one more time, send us down to 40 cents, that's okay. Or that's what we did. That's what we did after we ran up here this year to $1. And remember, when XRP moves, usually it moves last and it pumps the hardest. And it pumps out of nowhere, and it can go by itself too. Just like we did in July when it went up to this dollar level. Right? We broke all of the exchanges. Now, I'm just showing you this is the monthly chart, zoomed out to 2021 when we went up to about $2. But this is what we need to watch on the upside. Okay, once we can break out of this 60 cent, we're basically at the 60 cent iron wall, which we have flipped into support, which is very good to see. Love to see it, okay? We need to break through 75. We need to break through $1. The next levels to watch is about $1.20 to $1.30. $1.20 to $1.30 has always been a sweet spot for XRP. After that, we find resistance at basically $1.60 to $2. Now, what gets interesting is after $2, there's about nothing between $2 and all-time high of almost $4. The reason why there's not much there is because XRP was pumping so fast at the time that it went from about 20 cents to $4 within a matter of 1 month. So that's why when you look at the levels between the 2021 highs of $2 and the all-time high of about $4 during 2018, there's nothing in between there. So that's why I want us to break $1. That's the big one, big psychological number, right? And just to think, guys, we are in the last moments of accumulating XRP under $1. We really are. I firmly believe that. Have we been wrong on the timeline? Has this thing not performed to our expectations? Yes, true. Did we buy more? Did we take advantage of it? Yes. Or did we just sit around complaining about it? No, we absolutely did not. We absolutely did not. Because we understand that this thing, once it breaks above $1, you have the levels there, $1.20, $1.50, and you got another big one coming in at $2. But there is nothing between $2 and all-time high. And the speed, the acceleration of that move as it starts to pick up and build and go, can go over the course of just a few weeks to a place that we haven't been only once in the existence of XRP. After we break out to all-time high, the sky's really the limit. We've been so suppressed. There's so much money that's coming into the crypto digital asset space. And what I'm looking at right now is both an opportunity in XRP and in Ripple to catch a 10x. That's 1,000%. So when I say that I'm comparing all my investment opportunities against 10% inflation, if I'm not making 10% on my money, I'm not winning because the real rate of inflation is at 10%. Does that mean that I'm going for 12% return? No. Does it mean that I'm going for 15 or 20% return? No. Am I even trying to double up my money? Not with this bag. Not with this bag. Not with the investment in Ripple equity, and not with the investment in XRP. No, I'm looking for the 5 to 10 baggers. And I really think that this is within range when we look at both of these investment opportunities. Now, I showed you guys the chart there for XRP on the monthly. When you zoom out on this thing, at any moment in time, it can go. I believe that by the end of next year into Q4 2024, into Q1 of 2025, is when I'm expecting XRP to have definitely broken above $5 and potentially be breaking above $10 even. I believe that we do achieve $10 during this next bull run, and the timing of it to me looks like we start maybe a run up this next year and we finish off the bull run into 2025. XRP doesn't necessarily top out at the same time as Bitcoin, and so it's going to be very interesting to see if XRP can kind of follow along with the rest of the space, but maybe even break out at moments as well too. Now, one of the catalysts that could lead to XRP breaking out in a massive way too is going to be the Ripple IPO. So I want to talk about this investment opportunity as well. Now, I got to make a disclaimer before I get into this. I'm not here to be anybody's financial advisor. What I find is investment opportunities that I'm looking at, and I explain how I am doing valuations on these stocks, on these investment opportunities, even if it's real estate, even if it's a business, or even if it's a cryptocurrency or precious metal. I'm explaining my perspective, and I am not here to give anybody financial advice. And I'm not here to guarantee any investment, right? I'm just looking at, wow, I could see a 10x, in the offing, very, very consistent with what's happened throughout history. The underlying assets after an ETF, gold did a 5x, silver did a 10x. Now, XRP did 30,000% during the 2017-2018 bull run. So that's what history tells us. And somewhere in the middle, we meet up with an investment opportunity. Now, what I see is that the space is drying up right now. The VC money is tightening up, and the equities markets have started to cool off a little bit. Although the Magnificent Seven are ripping once again, now that we've gotten another pause from the Fed, that spurred the stock market to rally once again. So that's what took NVIDIA back up to a new all-time high. But money is getting tight out there, and that does include VC funding. And so for the private equity market, we actually just saw on Link2's platform, which I do have linked below if you guys are looking to buy Ripple equity or other investment opportunities that Link2 provides. I have provided a link down below. And if you want to get $500 when you sign up and invest, you can do so by using my link down below. So you get $500 towards your first investment. With Link2, they just brought down the price on their Ripple equity. And we've actually seen that in the private markets right now, that the prices and the valuations on a lot of these companies have cooled off slightly from where they've been selling at, because there was so much money sloshing around chasing investment opportunities. Now, I'm going to show you guys the Ripple valuation here in just a second, but I want you guys to consider how we could see a return of another IPO boom once again, just like we got in 2021. So take a look at this. Potential IPOs of 2024, current valuation estimates. So you have Skims at 4 billion, Waystar at 8 billion, Reddit at 15 billion. Now let me know in the comments down below, do you think that Ripple is a more valuable company than Reddit, than Skims, right? Well, I'll show you guys the valuation. The offering there on Link2 right now is about a $9 billion valuation right now. I'll show you guys that in a second. But you have Fanatics there at 31 billion. You have Databricks at 43 billion. You have Stripe, another payments company, at 50 billion. You have Shane at 66 billion. And you have Circle, which is set to IPO as well. And you actually can get Circle equity as well. I just got another email update from Link2, and they've made that available as well. Now, IPOs are down in 2023, 92%. So this is this is a very speculative, cyclical market where the money really comes and then it goes, okay? And so IPOs in 2023 are down 92% from 2021 highs. Can 2024 stage a comeback? I'm not holding my breath. That's what Genevieve Roque-Decter says. And I'm not holding my breath either, because I do think that the broader equities market can correct and is already starting to correct actually through 2024. And that is of concern. But I also see that we are beginning the next bull run for cryptocurrency. And after the equities get cleaned out and after we start to turn back on the money printer, I would expect these stocks to actually come back. And so the ones that do survive, that can still survive during a recessionary time that we're probably going to be going through over the next couple of years, they're going to actually shine, because the capital is going to be flowing from high flying stuff that really didn't have a solid business model or didn't actually turn out significant profit, and it's going to go towards companies that still are churning out real revenues and profits. And I see companies like Stripe, that's very interesting, at 50 billion. You see a company like Circle, not really sure where the valuation would come in there, but I think that by the placement that she put it below Shane at 66 billion, I think the expectation is that Circle could be even valued at even higher. Now, let's take a look right now at what Link2 is offering. So if you invest up to $10,000, you get the share price back down to $47 per share. Now, they give you an opportunity to invest less than that, but you're going to be paying $50.25 per share at a $9.1 billion valuation. Now, if you buy $10,000 worth of Ripple equity, you would receive about 209 shares at this current share price of $47.85. It's about $48 per share with an implied valuation of $8.7 billion. Now, like I said, you're going to get $500 towards your first investment if you use my link on down below. And why I like Link2 is that they do provide some information in regards to these companies. I mean, as much as they possibly can, as far as the valuations, as far as the prospectus, as far as the summary of kind of what you're investing in. What's so interesting about this Ripple deal is that they bought back their own shares at a $15 billion valuation in 2022. So understand that right now at that price, what Link2 is offering right now, it's actually at a discount from where Ripple just bought back their own shares at a $15 billion valuation just last year. Now, they did raise in 2020, they raised money at a $10 billion valuation. I remember at the time, that was when the word started to circulate around Wall Street, started to circulate around our community as well, about how they had achieved a $10 billion valuation through that raise that they did in 2020. And obviously that's not on the public market. That's through private offerings, raising funds, raising capital. And that's at a 10 billion valuation, but it tells you something that they were willing to actually buy back their shares at a $15 billion valuation there in 2022 with a Series C buyback. That was in January of 2022, and they raised another $200 million. So with an implied valuation of $8.7 billion, if you were to go onto Link2's platform and buy Ripple equity right now at about $48 per share, $8.7 billion valuation. As I highlighted with some of these other companies, like Reddit at a $15 billion current estimate. These are estimates. Stripe at a $50 billion. Databricks at a $43 billion. What's interesting here is that when I put into the title here, 10x for both Ripple stock and for XRP, I was looking at this and it just seems to me like it'd be, fairly conservative. You look at these companies, you look at these estimates, you look at Ripple, you look at their valuation, you look at their trajectory, and it's, definitely possible to see some significant gains here potentially. And for me, I look at, okay, we got to achieve a $43.5 billion valuation to get a 5x. So if that company IPO'd at a $43 billion, which is just under what WeWork IPO'd at. Remember, WeWork just IPO'd at a $47 billion valuation. Now that stock's trading at less than $1 and they've declared bankruptcy. So that's the type of misallocation of capital that we've seen during participation trophy economy and so much dang money floating around that people were throwing money around all over the place. $47 billion valuation commanded by WeWork, and just a few short years, what has it been, 1 or 2 years since they IPO'd, they're already bankrupt, right? I'm going to look this up right now as we speak. October 2021. Yeah. October 21st, 2021, $47 billion valuation, and now it's trading at less than a share and the company's bankrupt. Just 2 years later. 2 years' time, now the company's bankrupt. Now, I don't think that that's going to happen for Ripple, but I definitely could see a valuation coming in that's, very similar or even more, right? You look at Stripe, the estimated IPO that would come in, according to Geneva Roche-Decter, she's a certified financial advisor, Stripe at a $50 billion estimate valuation, you're right in line with that. And to achieve a 10x, if you bought today on Link2, right, you would need to see that valuation go up to $87 billion. Now, in another video, I did Ripple IPO versus XRP, and I compared, and I went a little bit more in depth on this as well, too. And you look, there's been 6 companies so far, I believe, that have achieved trillion-dollar valuations as far as market capitalization reached. And so even with Ripple, no matter where they start out at with the IPO, I think that the potential for this company over the next decade, the next 10 to 20 years is absolutely massive. A company that is set to dominate the payments space, in my opinion. And, this is much bigger than a Skims company. Skims at a $4 billion valuation, right? How much more can Skims maybe go up? All right, how much more can they churn out? You got a company like Reddit. Reddit, Reddit's still something that's being used, but how much money is it turning out, right? At a $15 billion valuation, I'd be curious to see who's making more money right now, Reddit or Ripple. And here's the other thing, folks. Okay, I can't forget to add this point. It's so critical. You cannot forget this. They have not accounted for the XRP and escrow in their valuation. Now, I've talked about how a lot of the escrow, I think, is pre-allocated to these banks and institutional partners, and that very well could be the case. But even with that, right, even if Ripple is still sitting on another 10 billion XRP, well, that alone is worth what? $6 billion at today's price of 60 cents? So that would be, that would be added on to the valuation if you were actually looking at the company. And the reason why they don't add it to their valuation is because it's how they do generally accepted accounting practices, GAAP. It's not in their possession. It's in the escrow. So it's technically not in their possession. They don't have, they have claim to it, but it's not like on their balance sheet right now. So that's why they don't include it in the valuation. So just right there, you're buying at a discount, in my opinion, just based off of that fact alone, that the escrow is not being included in that valuation. So when I look at the opportunity right now, you pick up some Ripple equity while it's valued at 8 to 9 billion, and you look at the potential for this company to go to even just $100 billion of market capitalization, right? Is that impossible? No. Look at how Ripple has compared themselves to Amazon. And Amazon is one of those companies that has now achieved over $1 trillion market capitalization, along with a few others there as well, Apple and a couple others, right? And so I believe that the opportunity there for a 10x is conservative for both. And when you can keep a expectation conservative and you're still talking 5, 10x, I mean, compared to what Wall Street would have you go in, what your financial advisor would tell you to go in, to me, that is where you want to go, because like I said, real inflation is 10 to 20%. So if I look for an investment opportunity that's pitching me, a 10 to 20% return, I'm breaking even. I'm making a little bit. I can buy myself a lunch. I can take wifey on a little date and, have a good time. But for me, if I'm going to put up some capital for some risk, why don't we go try to chase down these big ones? Let's go hunt and catch one of the big ones, because they're there and they've been happening and they're going to continue to happen. And what I want folks to be careful for in our community is have your exit strategy ready. After these gains are realized, what are you going to do? And well, let's be careful. You don't have to realize the gains. You don't have to sell. You can leverage these positions as well, which may be something to consider, right? For me, with my silver, if I have the option to maybe take it into a bank, like I'm going to be talking about it. I recorded a video today that's going to be dropping tomorrow morning at 8 p.m. Pacific Standard Time, 11 p.m. Eastern. And it talks about Peter Schiff, how they tried to come after him. And what was he offering? He was offering a bank that didn't loan out customer deposits, allowed you to hold gold and silver, right? And, had some of the strongest KYC AML application process to actually get in. And they tried to frame him for basically allowing all this bad activity to go on with his bank and all these criminals to get on. And he's now won his case in court. And this Australian, media outfit and a couple journalists are going to have to pay him over $1 million for defamation. And the point why I wanted to record a video about it today is because I was so motivated and inspired listening to him speak, because he's just another one of these guys that was trying to provide an alternative for folks. Hey, you want some exposure to gold and silver. You want a bank that doesn't loan out your deposits, right? And he made the point. When you deposit all of your money at all these other banks, they're doing fractional reserve lending. They're lending out 10 to 100 times what you're depositing in the bank, versus with what he was doing, no lending out of deposits, period. Exposure to gold and silver. You got it. He was trying to offer a debit card that allowed you to spend gold. God forbid you try to offer that alternative to the people. They're going to come after you. And so they did. And it was an absolute hit piece. And I was listening. What got me so motivated to record the video today was I was listening to Peter Schiff, the interview, and it was just a complete setup. They tried to set him up. It was a complete hit job. And they tried to stop him from actually releasing the video because they had to take it down off their website. They had to delete it. Both these two journalists are each having to pay $500,000 in damages to Peter Schiff. And he said that he might even sue them even more. So we got our red folder. Peter Schiff has his red folder too. And he's going to be going after them hard, as he should, because they're liars and they're trying to protect the incumbents. So it's why I recorded a video. It's titled "The Good Guys Are Winning." And I relate it to how Ripple and XRP's now found legal clarity as well. Right. But I say all that to bring up this point back home, guys. This investment opportunity, when you just stay conservative, when you invest in opportunities with limited counterparty risk or no counterparty risk, right? You store your silver yourself, you store your gold yourself, you got your XRP in your self-custody wallet, no counterparty risk, and you know the utility that you have. What I want our community to be ready for is for the price reset that is coming for all these assets, for your precious metals, that's coming for your cryptocurrencies, and that's going to be coming if you invest in a company like Ripple. Now we know there's also the talks of Circle going public next year as well. That could be another opportunity as well. What I want folks to be careful for is that these IPOs have been so hype, and they have been massive liquidity events for the insiders, the folks like us that are trying to get on the inside and buy this equity before they go public. That's where all the money's made. Why do you think that Gary Gensler wants to keep you out of this opportunity? So that him and his buddies can make all the money, and then you can buy an ETF and his money manager buddies can make a fee every year off of you trying to get some exposure to crypto, versus being able to hold the underlying asset, versus being able to invest in these private equities deals before these companies do a 5 or a 10x or more, right? These are conservative predictions for Ripple and for XRP and for Circle there as well. It appears that they have really set themselves up in a massive way. Looks like they have some staying power in this new financial system as well. With stablecoin legislation right around the corner, they'll have that. Along with it, doesn't appear like they're going to be sued. Looks like they're on the up and up, and the SEC's busy going after all of the crypto asset securities, right? All of the ERC20 tokens and the token factory, and they tried to come after Ripple and XRP, and they got shut down. And they're trying to come after anybody that threatens the incumbents. And it's just like Peter Schiff, he created a bank. It actually wasn't available for Americans, unfortunately. But an opportunity for folks to just store your money in a bank that didn't lend out your deposits. What a crazy idea. How dare you, Peter Schiff? And they tried to slander him and say that he was letting all these, criminals and terrorists coming onto his platform. It was all fake. It was all lies. It was all manipulation. And then I tied it into Grant Cardone, what just happened with Grant. And I don't worship any of these guys. Let me be very clear. I listen to them and I respect them immensely. I've listened and I've read some of Grant Cardone's books. I've listened to a lot of his content. I find him very entertaining, and I respect what he's done. And I respect the fact that he won his case, which was a class action lawsuit by one investor. I always thought that a class action lawsuit had to, involve multiple investors? No. I guess apparently you just need one, and you can file a class action lawsuit if you get a lawyer who's, slimy enough to come in and try to make a case. Or I guess in a legitimate case, you would have, a case to be made, even if it's just one. But in the case of Grant Cardone, he had one investor that was going to sue him for class action over an investment of $10,000. Grant reached out to him, tried to give him his money back, tried to make the guy whole. No damages would have been done. But the guy wouldn't accept it, and they tried to go after him. The charges ended up getting dropped with prejudice. Similar to what happened with Brad Garlinghouse and Chris Larson, the executives from Ripple. Charges dismissed with prejudice. So same thing here, basically with Peter Schiff. He was, being called a fraudster, being called a criminal, all this. Meanwhile, look at the hundreds of millions and the billions of dollars that the incumbents have had to settle for all of the crimes against humanity that they've been happy to facilitate. All of the money laundering that they've been happy to facilitate, right? And so that's why I tied it in with Peter Schiff winning his case, Grant Cardone winning his, comparing that back to Ripple XRP having clarity now, and just bringing back home the point that the good guys and gals are winning. We are on the right side of history. We do have the facts on our side. We're winning in the courts, and we're about to win when it comes to the financial investments that we've been making as well too. When you look at these markets and the reset that is underway, and if this is the bull run, if this is it, that's great. We're positioned. If they give us one more black swan, one more simulation event, we got capital on the sidelines for that as well. Our buy orders will be filled, God willing. And I'm not talking about Jesus Coin. I'll be doing another update on the Jesus Coin. Huge shout out to Lee for coming through tonight once again. The Jesus Coin community found, they got the word that I was going to be reviewing their project, and they're losing their minds right now. So we're going to be talking about that one in another video. But in a very serious note, you guys know where I'm at with all of this deal right now. We're continuing to watch us run up here for cryptocurrencies, precious metals. Love to see it. Okay. The other thing, though, that we're being prepared for is inflation coming back. And that's why we're focusing on growing our businesses right now. If you guys haven't already, you guys need to be preparing. Now, whether that's you getting a raise at your existing job, whether that's starting the side hustle, whether that's scaling up your existing business, we got to get it done because we need more cash to feed the family and to buy more assets when they go on sale. If you want to get on the right side of this transfer, that's what you need to be focused on a daily basis. And then you tune in, you get tapped in with our community, you get tapped in with like-minded individuals, and you get to find the best opportunities for investments in the world. We're covering them all. And let me know in the comments down below what you guys want me to review next, whether it's a cryptocurrency, whether it's a stock. We have a lot that I'm going to be reviewing, and a lot of them I end up reviewing only in the private groups. But if you guys want to see, I will be dropping some more content here on the YouTube as well, as far as valuations on some of these companies that we're suspecting to go public. I've talked here recently about Kraken. Kraken just got sued by the SEC. I'm sure that their valuation is going to fall off. Is that maybe a buying opportunity? Maybe. I don't know. I haven't looked at it yet, but I'm going to be looking at that one. I'm going to be looking, even Coinbase. I'm interested in taking another look at Coinbase. I don't like buying into big green candles. Coinbase has already ran up significantly. And I don't like following coins that have already, or, projects that have already gone public, stocks that have already gone public too much. I'm mostly focusing my capital because I have limited capital, right? I'm not Warren Buffett here with 150 billion to deploy. I got my little measly bag that I need to allocate. And so I don't diversify amongst 20 different cryptos, amongst 20 different stocks. I don't try to run too many different businesses. So we're just focused and locked in right now, stack as much cash as possible, get liquid, dry powder on the sidelines so that we can buy the blood in the streets. Just like the Rothschild said, even if we're the ones bleeding, we're still going to be buying out that blood in the streets. And it's already here. It's already been confirmed in the real estate data. You're starting to see it in the equities, starting to see a little glimpse. And crypto already we just ripped off the Band-Aid in crypto. That's the good news, is we just ripped off the Band-Aid. Now we're moving up, and just be ready. We still have many threats facing the cryptocurrency space and the broader economy and markets as a whole. So with that patience, with that caution, we continue to buy the dip and any chance that they give us to keep on stacking these assets when they go on sale. So with that being said, guys, I am running a sale. Speaking of offers, we got one running through the end of this year. You can save 13% on your annual Patreon membership when you sign up for a 1 year. So take advantage of that. That is only going to be running through the end of the year. And then get on our list. We're filling out our calendar right now with one-on-one sessions for a limited time. Feel free to do that. If you want to talk about business, investments, life with me, the one-on-one sessions are available, but the spots are filling up quickly, and then that gets cut off once again, and the price will be going up once again at the beginning of the year as well. So I'm running those specials through the end of this year. And also talk with your tax advisor, professional, or accountant about being able to write off the cost of some of these investments in your education and getting to join a community of like-minded individuals as well. Getting to write it off is also another benefit that many members of our community are taking advantage of as well. So with that being said, guys, it's been a pleasure here running it up. I appreciate everyone for stopping by. If you haven't already, please make sure that you smash that thumbs up. Come on in. It's at zachrector.com for all of our community resources. And I appreciate you guys so much. My apologies for the 15 minutes of no sound. And I appreciate everyone for stopping by. Okay, I will see you guys in the next one. God bless you all. Thank you so much.